Hi, I'm Donald McIntyre, founder of Etherplan, and in this video, I'm going to do a risk analysis of my Ethereum Classic price predictions. My price predictions for Ethereum Classic are 1,000 in 2022, more or less by the end of June of 2022, 8,700 in the next crypto bull market cycle, which should happen in 2025, and in the other bull market cycle, which should happen at the end of the decade. I expect Ethereum Classic to be trading at 33,000 more or less by 2029. So I'm going to divide what I consider my assumptions or opportunities on one side and the arguments against those assumptions or what I call the threats on the other side. This is the analysis. So the opportunities and threats, the opportunities that I see or my assumptions is that Ethereum Classic is very well positioned in the market. So the positioning logic. If you see all the list of in CoinMarketCap or CoinGecko of all the cryptocurrencies, that's not the way to see the market anymore, in my opinion. You just have to separate proof of stake coins on one side, meme coins on the other. Stable coins are a different kind of segment, and you have the wrapped coins, which is another kind of segment, and other coins that are in the list that do not belong in the same segment as the proof of work coins like Ethereum Classic. If you only list the proof of work coins, the largest coins, you're going to see that there's Bitcoin, Ethereum 1.0, Dogecoin, Litecoin, Bitcoin Cash, and the sixth is Ethereum Classic. So Ethereum Classic is already the sixth largest proof of work blockchain in the world. And I think that the positioning logic basically is that one, that Ethereum 1 is going to merge into Ethereum 2.0, so it's going to go away from this segment because it's going to be proof of stake. And second, that the next three ones are Dogecoin, Litecoin, and Bitcoin Cash are identical to Bitcoin. They don't do anything different, and they're not programmable. And ETC, which is the next one, is programmable. So it should climb in the next 6 months above Bitcoin Cash, Litecoin, and Doge, as the market realizes when Ethereum 1.0 leaves that it's much more valuable because it's digital gold and programmable. The second assumption is that the blockchain is going to be layered. So these segments that I separated are going to form layers in the blockchain industry. So you're going to have the base layer are going to be proof of work coins because they're much more secure but less scalable. So they're going to use they're going to be used as the core of the blockchain industry to provide security and monetary services because they also have sound money. In the layer 2, you're going to have the highly performant and highly scalable proof of stake blockchains like Ethereum 2.0, but those are less secure. So this layer 2 is likely going to connect to the layer 1, anchoring their state and also using monetary services. For example, wrapped ETC, already 1 million ETC already exists in what is called wrapped ETC in Binance. And billions of dollars of wrapped Bitcoin already exist in Ethereum. So when Ethereum moves to proof of stake, it's going to be effectively the layer 2 of Bitcoin and ETC and the layer 1. Combine these two layers will provide services to dApp developers and users in the world of the complete blockchain experience, which is going to be scalable and secure at the same time. Then on top, the layer 3 is going to be the dApps, that build on top of these two layers, and on top of that, the wallets, which are the ways for humans and people to use the whole blockchain industry, MetaMask, Trust Wallet, etc. So those are going to be the layer 4. The other assumption is that the crypto bull market moves in cycles. In 2013, we had a large bull market cycle in Bitcoin, and it reached new highs of 1,250 to 1,250. Then it went flat for 4 years, and then it went up to 20,000 in 2017, and then it went flat for several years, and it went to 69,000 in 2021. So these cycles are in 4 years, and they mimic the cycles of the Bitcoin halving, because Bitcoin cuts its payout to miners per block every 4 years. And every time that happens, soon after, a few months later, the market experiences these rallies, which are called cycles, because the supply is cut in half. That's the theory. And in the case of Ethereum Classic, it also has it's not it doesn't cut by half, but it cuts by 1/5 every 2.33 years. So I'm going to talk about this later. So my assumption is that Ethereum Classic is going to continue to go going up together with Bitcoin and the crypto industry in these cycles. The fifthening, so what I just mentioned, the cut of 20% in the issuance of ETC per block to miners is going to occur in more or less May of 2022 in 4 or 5 months. So that cuts the supply of ETC to the world by 20%, and it's going to happen now. So I think that's going to also affect the price of ETC to the upside. Number 5, that Ethereum 2.0 is going to merge successfully. This is that Ethereum 1.0 is going to migrate from proof of work to proof of stake, and it's going to merge into Ethereum 2.0 that already exists as a proof of stake blockchain successfully. So Ethereum 1.0, the proof of work smart contracts blockchain is not going to exist anymore, and ETC is going to occupy that niche, as I explained in point 1. My other assumption is that fiat money printing is forever. I think that this level of deficit in advanced economies, from Japan to Europe to North America, is here to stay at this level of debt. I don't think that interest rates can go up further, because central banks are going to have to choose between their nations defaulting or continuing to print money. And in front of the specter of defaulting, I think they're going to continue printing money and keeping interest rates low artificially, because we have reached the point where the US, for example, the national debt is 126% of the GDP. And if you calculate the interest on that debt, if interest rates were go to normal levels like 5%, it would be unsustainable, and it would have to default or continue printing money. So I think that we are in an era where fiat money is going to continue to inflate permanently. Millennials and Zoomers is my other assumption. I think they are crypto first. They are crypto first generations, and they are starting to save their money in crypto first, buying Bitcoin, buying Ethereum, buying NFTs. Sometimes they speculate and trade, but the reality is, I think that they're going to migrate from the traditional stocks, bonds, and mutual funds to crypto, and I think this is going to continue and increase in the future. The same with institutional investors, my assumption number 7. But institutional investors are traditional, have existed forever. Hedge funds, mutual funds, corporations, central banks, etc., for the treasuries. All these guys are starting to invest in Bitcoin, for example. And I think this trend is going to only increase. And just like millennials and Zoomers, in the long run, all these institutional investors are going to be crypto first, and they're going to have very large portions of their portfolios in crypto. That development growth. So this is not an estimate or a speculation. ETC today has a lot of new projects being built on it and already launched. It has several NFT projects already launched and selling their NFTs. There's 2 projects to launch. One already launched, and the other one is coming to launch NFT markets, which are critical infrastructure in a blockchain like ETC. And there's already one DEX already launched, and another one is coming to the market. And I know of other projects that are on the pipeline to launch in the future that are not announced yet, but they contacted me to get advice, etc. So there's more projects coming to ETC. So that development is growing. Number 10, as ETC is discovered even more by the market because of its code is law, fixed monetary policy, that it's digital gold, that it's programmable, that is the same as Ethereum in the sense that it uses the same operating system, the EVM standard. ETC, as ETC is discovered and grows, there will always be funding for development and research. So as this continues to happen, I think that there's always going to be funding, some billionaire or millionaires that are going to be donating their money because they own ETC on one side, and they donate a little bit of money to keep the protocol development and maintenance. This has been always a fear since ETC and Ethereum split in 2016, because Ethereum took all the money from the foundation and all the developers. There has always been a fear since 2016 that ETC would not have developers and no funding for development and all that, and research and other stuff. I think that is a fear that we shouldn't be thinking of that, because I think that as Ethereum continues to grow, it's worth $4 or $5 billion. More data development is happening. It's all organic. It's not artificial. It's not pushed by a foundation or a treasury or anything like that. I think that organically as well, more people are going to be willing to donate for development because they want to see their ETC grow. And the last assumption is that regulation cannot or will not impact ETC because it is trust minimized. Blockchains that are truly trust minimized, like Bitcoin and ETC, are so well designed that they have miners, node operators, development, and it's all just software development and software services. It's not financial services, and they're not prone to be regulated. If there's strong regulation, like in China, that directly prohibited everything, miners can go somewhere else and node operators can go somewhere else. Not only that, in trust minimized blockchains like BTC and ETC, you can even run your node, etc., even if it's prohibited. I mean, as long as they don't catch you and put you in prison, you can run a node. Today, there's some nodes being run in ETC. There's that development in China, BTC and ETC nodes being run in China. And there are some teams in China that are building dApps on ETC because it's impossible to stop. This is the beauty of Nakamoto consensus. And which is immutable, secure, truly distributed, and anyone from anywhere can join and leave the network. So what are the threats to all of these visions? I mapped one-to-one the threats to each one of my positive assumptions. So the threats to my first vision of the positioning logic is that for some reason the market continues to see Doge, Litecoin, and Bitcoin Cash as more valuable than ETC. For some reason, people think that Doge, Litecoin, and Bitcoin Cash, as they are better than ETC, even though ETC has fixed monetary policies, digital gold, and is programmable, which is much more useful than those three coins. The second one is that all dApps operate on a single blockchain and do not use a base layer. So this layered approach that I imagined, where you have the base, secure base, but unscalable, and then all the layers on top that use the base for security, and they provide scalability, and everything together is going to be the product of the blockchain and not just one blockchain or the other. So this vision may not happen. My opinion is that, of course, it is going to happen. It's already happening. But it could be stuck somewhere in the middle, or people just build on Ethereum and Bitcoin and in separate worlds, and they're not connected and organized in layers and components. The third threat is that ETC does not go up as the other. So I think that Bitcoin is going to go in the next 6 months to 125,000 and Ethereum to 10,000. And in that rally, which is the second leg of this cycle that shifted to 2022, ETC should go at least in the same proportions. When it could happen that for some reason the market neglects ETC and it just lags and it stays flat at 35 or 50 and it doesn't go up with the others. The other one is that the fifthening, which is this discount of 20% that's going to happen in May of 2022, 20% discount in the payout to miners, it's still after that, inflation is still going to be 3.91%, and the market may think that that is still high inflation and too much supply on a yearly basis. Um, or said in a different way, the stock to flow ratio of ETC when inflation goes to 3.91 is going to be 26 times. Gold is 60 times. Bitcoin currently is 60 times. And ETC is going to reach a stock to flow ratio of 60 times when the fifth inning continues every 2.38 years, is going to reach it in 2029. So maybe the market thinks, oh, there's too much supply of issuance of ETC per block, so the stock to flow is still too low, and maybe the market waits until 2029. The fifth is that Ethereum 1.0 stays and it's successful. So it could happen two things. One, that Ethereum, the merge doesn't happen ever, or it happens in 20 years or 10 years or 8 years or 6 years, like Vitalik has suggested in terms of a risk of not implementing Ethereum 2.0. And it doesn't happen in the next 6 months. And or the other thing is that it happens, but some developers choose to stay with Ethereum 1.0 and keep maintaining it. So you're going to have Ethereum 2.0 on one side and Ethereum 1.0 on the other, and so that would, and if it's successful, it's going to stay as a proof of work smart contracts blockchain, just like ETC, and that may damage ETC's positioning or ability to go up in the ranks. The other threat is that central banks contract supply. So maybe my view and the view of many, that these fiscal deficits in advanced economies and debts are, that the vision is that they're unsustainable and they're going to have to keep printing money to sustain those situations. Maybe it's reversed and central banks say, no, we're going to stop printing money, we're going to contract the monetary supply, risking default and risking recession and global crisis. But they prioritize sound money. So that's a risk. I don't think it's going to happen. Number 7, that millennials and Zoomers, Generation Y and Generation Z, stop buying crypto, or they just buy it as a secondary investment or savings mechanism, and they keep investing in traditional stocks, bonds, or mutual funds. The same with institutional investors. It could happen that the majority of their portfolio stays with stocks, bonds, and mutual funds, and they trade those things, and they just play a little bit with Bitcoin and ETC and Ethereum. I don't think so. I think that they're going to migrate fully, and a big portion of their portfolios is going to have ETC as well. I would use DCG, Barry Silbert's firm, as a model of the future institutional investors, and they have Bitcoin as their largest holding, and their second largest holding has historically been ETC, and they have Zcash, Mana, and others. The ninth threat is that development halts. So for some reason, these dApps, NFTs, NFT markets, decentralized exchanges, and the others that are in the pipeline coming, maybe they fail, maybe they didn't like ETC, maybe they came because of the code is low, mutability, and the hard money aspects, and because the fees are low. Maybe the fees go up and they leave and they go somewhere else. Maybe they fail, or so that development may halt for several reasons. The number 10, no funding for development and research. So if ETC stops growing and that developers go away, etc., it could happen, or even in the current situation where everything is growing, it could happen that for some reason billionaires and owners of ETC decide to not fund the ETC cooperative or development and research and infrastructure, and money dries out and ETC just stays there floating without any maintenance or development or research. And the last risk is regulatory risk. I think that Bitcoin and ETC are sufficiently trust minimized, and any of their components can go to any country if they're treated badly in wherever they are. And that because they are purely software operators and developers, I don't think that they are actually subject to regulations in any case, like proof of stake blockchains, which are subject to development because they resemble the banking system. But it could happen that for some reason regulation does affect Bitcoin and ETC, and that may affect the demand for ETC, and my price targets are not met. So if you want to learn more about Ethereum Classic and read my articles about my price targets, and I explain in detail how I think ETC is going to get to 1,000, 8,700, and 33,000 in the next cycles, in this and the next cycles, please go to etherplan.com. Thank you very much.